Hey, you know it's funny? Well, it's not actually funny, not funny at all, but I'm going to try to make it funny so we don't all cry. Clients call us because they're having a little cash flow problem. And that's like saying the Titanic had a little ice problem. By the time they call us and say, I've got a problem, usually it is way down the road and it can be too late. Stick around to the end, and I will tell you about a client that one of my advisors is working with right now who it might be too late for. Today, I'm going full David Letterman. One of my favorite things was the top 10 list. And today I've got the top 10 cash flow red flags your client is waving right now. In addition, if you stick around to the end, I'll give you an action item that you can take that's simple to identify cash flow issues. In one of those clients, you go, yeah, I think they're having issues. I'll help you understand how you can do it simply, easily, and show it to your client. And I'm going to give you an ebook that has 24 fantastic strategies that help your clients make money. And they're positive cash flow strategies that also show a profit. A lot of the cash flow strategies out there do not. So let's get into this right now. Let's do a drum roll. Terrible drummer. Red flag number 10, accounts receivable growing faster than sales. Number 10 is a silent killer. Your client's revenue is up 20%. Sounds great. But when the accounts receivable is up 40%, they've got a problem. And you know what that means? It means they're making sales and nobody is paying them. They did the work, they sent the invoice, they recorded the revenue, and maybe they're showing a profit even, but the money, the cash that they're going to pay their people with, they're going to pay their rent with, pay their suppliers, pay you, it's still in their client's bank account. The customer hasn't paid them yet, and who knows when they will. Red flag number 9, accounts payable is increasing disproportionately to sales and to inventory. Yes, number 9 is when your clients are playing vendor roulette. They're paying Peter instead of Paul, and Paul is getting really annoyed. And they might think they're managing cash flow, but what they're really doing is using money to go back and forth and taking 45 days to pay a 30 days, taking 60 days to pay a 45-day invoice. They're not being strategic, and their vendors think they're going out of business. Red flag number 8, that your clients have cash flow issues. Number 8 is what I call the warehouse of broken dreams. So your client gets a real deal on inventory, or they're starting a new product line. It doesn't matter where it comes from, but all of a sudden the inventory is growing disproportionately to sales. Maybe they stocked up and now they have too much inventory for sales. And you know what it is? Inventory is just a physical object taking up space, taking a nap. And if your client says, but we got such a great price, remind them they can't eat widgets for dinner or clothing or whatever that inventory is. They can't make payroll with it. Red flag number 7, revenue growing, but cash in the bank is flat or declining. This is the slow bleed. The revenue is going up, 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 and their cash is going nowhere or down. And your client shows you, hey, look, my sales went up from 500K to 800K last month or last year. Doesn't matter. We're crushing it. And then you show them their cash balance, and it looks like it's that ski slope I just described, going downhill and is about to crash into a barn. Now explain why. And can they explain why? No. It's death by 1,000 paper cuts. Each sale might look profitable. Each month might look fine from a P&L perspective, but somehow their bank balance keeps shrinking. Red flag number 6. They've got a pattern of being surprised by cash shortfalls. Number 6 could be called predictable unpredictability. When every single month, or maybe every other month, or maybe every quarter, your client is shocked, but they don't have enough cash to make payroll vendors or cover their tax payment. And by the way, if you're here with me live, thank you for being here. Stick around to the end. There's going to be lots of great stuff. So, number 6 is being surprised by the shortfalls. And it's like, oh, I didn't think we'd have a problem this month, oh, or this quarter, and they keep coming back and back. It's like being surprised by Christmas. It's coming every year. And yet, I always wait to the last week to buy stuff for my wife. I don't know about you. It's a different issue, but that's what these clients are like. Oh, we've got to make payroll in 2 days. We don't have cash. They're not thinking long term, and they're digging their heads into the sand, not paying attention to the world around them. They're ignoring reality. All right, we're halfway through. Red flag number 5, relying upon accounting reports for cash visibility. Your client is making cash decisions based on accrual or even cash basis accounting reports. And they look at their P&L and say, we're profitable, we're growing. They look at their bank account and say, where'd all my cash flow? Where'd all my cash go? The P&L is a liar. Sorry, I know I've been taught it also that this is the right way to do it. And it is correct according to GAAP, but it is misleading, which is even worse than being a flat out liar. The P&L says, you made a sale, you recorded the revenue. And the bank account says, yeah, but there's no revenue inside of me. I need it out of the other bank account into my bank account. That's a clarity gap. And it happens with 99% of all customers who aren't trained in accounting, and most of them are not. They're shocked when there's no money in the bank because the P&L says they're profitable. All right, red flag number 4. We're getting to the end. Stick with me. Number 1 is a biggie. They have positive net income, but negative operating cash flow. This is obvious for you to see. And again, their income statement saying, hey, you made $75,000, but their cash flow statement, or if they just look at the comparable bank balance, says you burned $32,000 in cash. It's the accounting version of your check is in the mail. They're not fine. They're broke and profitable at the same time. Red flag number 3, rapid revenue growth with cash declining. And rapid revenue growth, I know we keep talking about this the revenue growth, but rapid revenue growth generally means they have to spend money before the money comes in. And this is, and a big part of it is there's messaging from all these sales gurus say, improve your cash flow, sell more, and make more money today, sell more money now. You'll fix your cash flow problems. And yet it creates cash flow problems 99% of the time. We'll keep going to red flag number 2, growing debt with minimal cash reserves. They've got more debt than, somebody who went to an Ivy League school and got a philosophy degree and try to pay for it on their own. Debt is a killer. And one type of debt in particular, if they have a MCA loan, it's a huge red flag that they're in trouble. The test is, if their credit line disappears tomorrow, can they survive for more than a week? Can they survive through payroll? If the answer is no, huge problem. All right, now we're down to it. Red flag number 1, your client screams, where did all my cash go? That's a sure sign that they've got a problem. Yeah, I know this is a universal cry that most business owners make at some point. But let me tell you, I told you if you wait around to the end, I'm going to tell you about a client one of my advisors is working with right now. My client, he's an accountant, told his client a year and a half, 2 years ago, you look like you have issues, and was ignored. No, it's okay. I'll take care of it. Ignored repeatedly. Every quarter, you should come in and talk to us. It looks like you have issues. Finally, last week, the client called and said, I need your help. I need it now. I couldn't get another loan. I had to borrow money from my father in law. And when that happens, there's huge issues, especially when some of those loans were MCA loans, merchant cash advances. I'm coaching him to dig through, and we've seen how it could possibly work. However, at this point, the client might be throwing good money after bad, which is the worst case scenario. It might mean shutting down the business, which can have personal as well as business ramifications. Do not wait for that to happen. Do not wait until your clients are screaming. Here's the action item for today. It's easy. Pick a client that your gut is telling you they are having issues. You don't have to have any kind of anything but a gut feel at this point, and then do three things. Run 3 reports for the last year by month. Number 1, monthly ending bank balance. Just do a P&L by month, not a P&L, sorry, a balance sheet by month, and look at the cash balance. Is it going up, down, or basically non-existent? Number 2, what's their monthly ending inventory? Is it going up, down, or way up? Number 3, look at their long-term debt and their short-term debt. Yeah, look at both. Why? Because if it's growing, and especially now you're going to compare these. Oh, they don't have cash, debt's growing, and inventory is going up. It means they're not making the sales, which not generating the revenues. You'll get a good picture of what's happening with just those 3 reports, and then schedule a conversation, show them the patterns, help them understand. Oftentimes they will say, yeah, I knew there was a problem. I just didn't know what to do about it. And they were too afraid to come and talk to you. That's your entry point into cash flow advisory. Be courageous. You get this going and you can command premium fees. Now, before we wrap up, I want to tell you about Pivot. It's the Unconventional Cash Flow Conference. It's a boot camp, 4 days, intense. If you like this, what you're hearing today, and you want to learn how to work with clients, identify clients, and help them out of their cash flow struggles, you can get a kickstart in just 4 days. Go to, and it's been scrolling along the bottom, but it's pivot2026.com, PIVOT 2026.com to learn more. And now the lead magnet, the giveaway I want to give to you. Boost the bottom line. 24 powerful cash flow strategies you control. It's a fantastic book. I'll tell you, I've bought books on cash flow. This free ebook has better information than most of the articles that you're reading in the Wall Street Journal or in so much of the popular press. It is basically it's only for problem companies. You want to identify ones that are on the verge and help them be proactive. And that's what these strategies are, proactive strategies. Go to CIC60.com to get the ebook. So thank you for tuning in to Cashflow Confidence Live. I hope you had half as much fun as I did recording this. Remember, your customers, multiple, are waving red flags right now. The question is, are you going to see them? The other question is, are you trained to see them? You can get trained because The accountants who find these warning signs early and fix them are literal heroes to their clients. And they're the ones building six-figure advisory practices. Stop being a compliance accountant only. If that's what you want to do, this is where you should be. If you want to venture into advisory, stick with me and start being a cash flow advisor who predicts what's coming and helps clients avoid disaster. Until next time, be the confident cash flow advisor your clients need.